Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at Bitcoin's incoming volatility. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on lookintobitcoin.com, and specifically the derivatives chart we have here on Look Into Bitcoin. And we have the Bitcoin open interest and the Bitcoin funding rates chart. So if I just go to the Bitcoin open interest chart first, we can see here, this is looking at the open volume in Bitcoin derivative contracts. And if we just scroll down a little bit here, we can see this is looking at both Bitcoin futures and perpetual swap contracts, which are just pretty much same day expiry futures that continue to roll over, perpetual. But if we just scroll up, we can see here, this is denominated in USD currently. So we can see there's currently just over $8 billion worth of open interest in these derivative contracts. Now, these derivative contracts are useful for traders because it allows traders to bet on what is a derivative. So it's not actually the spot underlying asset of Bitcoin, and it allows them to then utilize leverage to either increase their exposure to the market or potentially even short the market, which is betting on price going down. But I think the most useful way to use this chart is to go to BTC or coin denominated futures contracts, and we can see here that while this isn't quite as tied and parallel to the price action as the USD chart is, it gives us a clear understanding of the current interest in these derivative contracts. And what we can see is over the past few months, this has climbed from around 250,000 Bitcoin currently sitting in open derivative contracts to the upside to not too far beneath 300,000 Bitcoin. Now, this is a substantial increase in the current open interest of BTC denominated futures and perpetual contracts. But what is driving this increase in open interest? Why are people putting more exposure into the market? Because we can see from other metrics such as the active address sentiment indicator that it's not necessarily due to a larger amount of traders and investors entering the market. This is due to traders and investors who are already in the market beginning to bet on what the next incoming volatile move is going to be for BTC. Once we start to get, especially over the past few weeks, a little bit more of a stagnant price action where price is a little bit indecisive and we're only moving a few percent here and there, a lot of people almost get impatient at the lack of directional trending and volatility and just exciting price action that we're really used to within Bitcoin and the crypto market. So we'd start to see people increase their exposure, start allocating more capital to their open leveraged positions to try and maximize their profitability on the next move, assuming they, of course, get the next move correct, which is where we can look at something like the Bitcoin funding rate, which is again looking at derivative contracts, specifically perpetual futures contract. And the funding rates, when you have an open perpetual futures position, you actually have to pay funding just to keep that position open. It's usually in set intervals of around 8 hours. And again, this defaults to USD, but me personally, I find the most use to, again, change this to coin denominated perpetual futures contracts, as I believe it gives a truer representation of the current sentiment within the market. And what we can see here is a lot of, again, indecisiveness in this Bitcoin funding rates. So once this is spiking considerably to the upside, it indicates that a vast majority of traders are betting on price going up. They're in long positions and are therefore having to pay to keep their long positions open. And the vice versa is true for the downside. Once we see this huge negative red spikes to the downside in the Bitcoin funding rates, it indicates that a majority of traders are short or betting on further decreases in the Bitcoin price section. And what you may be able to spot is these are actually fairly inversely correlated. Once we see a huge spike to the downside, this actually usually correlates to Bitcoin's price bottoming out. And that's just generally because most traders aren't that good at trading. Most don't make substantial amounts of consistent profit, and most follow the herd by trying to short once the huge move to the downside has already been made, or trying to long once we've already had an exponential run up in price. So it's usually best to play contrarian in these market conditions. But as we can see, once we have the funding rate fluctuating quite consistently between negative and positive, it indicates that a lot of traders really can't make their minds up on what they think the next directional move in Bitcoin is going to be. So once we see this paired with the open interest starting to steadily increase, it really does give us some indication that a big volatile move is coming. And it doesn't really give us any indication of what direction that move is likely going to be in, because we can't necessarily play contrarian to the majority of the market if the Bitcoin funding rate is very neutral. So what we need to do is look at what each potential outcome could look like so we can best prepare regardless of what plays out. So if we just go to the BTC USD chart here on TradingView. I'm just on the weekly chart here. Another thing we can use is something like the Bollinger Bandwidth. Now, I've seen this mentioned a number of times on social media platforms like Twitter or X now, I suppose. But if we just load up the Bollinger Bands here, this is looking at the standard deviation of Bitcoin over a 20 period. So we're on the weekly time frame here. So the past 20 weeks of Bitcoin, we're looking at the standard deviation or volatility, as it's pretty much the same. And we can see once these start to really contract and narrow, it indicates that the deviation is really decreasing, that there's a very much lack of volatility in the Bitcoin markets. And if we just look at the Bollinger Band width, which is purely just taking into account these Bollinger Band lines, this upper and low end, looking at the difference between them, we can see we currently have a value of 0.2. So if we just scroll back here on the weekly time frame, we've actually never had a Bollinger Band width value as low as this in all of Bitcoin's price history, which is pretty surprising. But what we can see is in each time that the Bollinger Band width became this narrow, it always led to a volatile move. If we just scroll back all the way to 2012 here, we can see that we had a fairly low amount of volatility at this period in time before we had this huge exponential price increase. And if we just scroll again here, we can see this came comparatively close before, again, a huge price increase. And as we just scroll along, we can see in all of these circumstances, as soon as the Bollinger Band width became this narrow, we could see a huge move to the upside, or occasionally we do see a huge move to the downside. So what we can really say is that, again, this doesn't necessarily look to be a confirmation of which direction we're just going to go in. All we can say is this is looking like it's confirming that we are going to have a big move in Bitcoin in the coming days, potentially even weeks. I know we've recently had a bit of a breakdown from the 30K key support level in the Bitcoin price, which may give a little bit more of an edge to potentially a downside move, but ultimately this is crypto. If we were to regain that and really get some liquidity pumping into the market, it really could spark a large increase to the upside too. What I'm just going to do as well is load up something we looked at in our most recent roundup video, which is the price range just on the monthly chart. So we recently discussed how we'd had one of the lowest price ranges, the percentage from the high we set in the current month to the low in the current month, that we've seen in about 8 years in Bitcoin. What we can also do is look at this price range and see that we are actually decreasing at a pretty steady rate in terms of volatility. Bitcoin throughout every cycle just is becoming less volatile. And this is just generally because as the market matures, as the asset class grows, it becomes much harder to move the market substantially. It just requires a huge amount more of capital. If you're trying to move a market that is just worth $100 million, then a few $1,000,000 is going to be a really substantial portion of that and is going to really impact the underlying price. Whereas if you're talking about a market that is potentially into the trillions of dollars, the amount of capital needed to make a real move in the market is substantially higher. So we may not see as volatile moves as we have previously, but again, just looking at all the metrics, it does look like we may see a volatile move sooner rather than later. And like we said, if we are to see a volatile move, rather than just blindly guessing which direction we believe it's going to be in, because sometimes it is just a bit of a coin flip, what we need to do is prepare for each circumstance. So if we look at something like the 200 weekly moving average heat map, what I've just done is zoom in so we can see it up close and personal. And we can see here, if we were to see a move to the downside, the first level we really should be watching is potentially this line, the 200 weekly moving average, which is just collating the previous 200 weeks of price action and averaging that out, which currently sits at just above $27,000. Now, historically, this has been a great level to accumulate at, and apart from in the most recent bear cycle, we'd actually never dipped beneath this for consecutive months. So if we do reach this 200 weekly moving average, it may not be a bad place to start dollar cost averaging into your positions if we were to have a volatile move to the downside. But what about if we were to have a move to the upside? So next is the Bitcoin Investor Tool, or the 2-year moving average of Bitcoin. And again, this has been a clear indicator of when we're potentially in a bear market for Bitcoin. So if I just zoom in over the past few cycles here, we can see we have spent a considerable amount of time beneath this level, and we haven't actually broken above this line yet in the current transitionary period between bear and bull cycles. If I just zoom in even further, this line currently sits at just above $32,600. So if we were to see a move to the upside, then this again could be a good first line to look at as potential resistance. And it's also interesting to note that these two lines, the 200 weekly moving average and the 2-year multiple, are pretty much equidistant from the current price. So really could go either way. And another tool I'm looking at if we were to see a bit more of a volatile move is the golden ratio multiplier. And again, I've just zoomed in a little bit so we can see a bit clearer here. This is looking at the 350-day moving average, which is currently sitting at $23,233, but is increasing ever so slightly every day, and is just multiplying this value by the Fibonacci sequence of numbers. So the first line above us is the 1.6 multiple, which is at $37,100. So again, these are about equidistant from price, and both could be great areas to watch if we do have a really volatile move of multiple percent to the upside or the downside. So once we've broken through the previous support or resistance lines we looked at, these are the lines I'm going to be watching. $37,000 a potential upside target, and potentially $23,000 if we do unfortunately have a volatile move to the downside. So just to summarize, historically, after extended periods of low volatility for the Bitcoin price, we typically see a quick and explosive move for Bitcoin. And using a number of technical and derivatives-based data, we can conclude that Bitcoin is likely to see a big breakout in the very near future. However, predicting the direction of this move is considerably more difficult than just preparing for both circumstances. So if we just set realistic outcomes and targets for both the upside and the downside and manage our risk accordingly, we're likely to come out better than most that are just blindly betting or really focusing their bias on one direction and missing the bigger picture. I think a lot of investing is just preparing for all circumstances. So if you can have a plan if we potentially break lower for further accumulation, or if we break substantially higher for potentially locking in some profits, then both of those outcomes are great as long as you are prepared using metrics like we've discussed today. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And I have to say, I have recently been using a lot of these indicator alerts I've received personally to my email address to come up with great metrics I could use in this video specifically, such as the active address sentiment indicator, which gave us a great sell signal before letting us know that potentially the open interest is increasing fairly substantially. So I definitely recommend checking out subscribing to Look Into Bitcoin as just one of the bonuses. As I said, you get lots and lots of bonuses. And let me know in the comments down below, which way do you think Bitcoin's price is going to move if we are to get a very volatile move to either the upside or the downside? Are you more bearish and think we're potentially going to see more downside price action, or are you a little bit more bullish and think we're going to see a bit more of a rise to the upside? As I said, let me know in the comments down below, and on social media I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.